Hi folks, it's Aiden CryptoBirb speaking. Welcome to today's special video report. In today's analysis, I'm going to get you guys a brief walkthrough for what you're looking at in the 12-hour time frame on the Bitcoin USD spot price Bitstamp exchange. Let's have a look. Well, first of all, you can tell that there is this dominant descending, declining tendency defined by the long-term trend. The long-term trend, which is actually here referred to as 200-day average, 200-day mean, which means that it takes the average, the arithmetical average of the past 200 days, or actually past 200 days in this very context, despite it shows the 12-hour time frame, it's still 200 days that kind of like is taken into consideration, which tells you that the average price of Bitcoin that is supposed to be fair, that is this main point of reference, is at about $20,500. This is what we would call as a fair price, as a fair valuation of Bitcoin right now in terms of the price chart. So here we know that lots of traders are potentially going to be looking at it, and because of that, on a self-fulfilling prophecy basis, it may well act as this level of resistance towards which Bitcoin may actually gravitate eventually, provided that it actually elevates higher than the local highs. So far, we are looking at this dominant, again, tendency, but locally, we are talking about the sideways environment. The sideways environment is actually, again, trying to reshape a little bit the local pattern with the sideways as well below the critical support level. The 17,500 remains to be the main support level of this entire massive sideways theme movement. However, ever since it broke down, we are looking at this struggle, a lot of struggles, and Bitcoin tumbling, basically trying and attempting time after time, failing to break above it and sustain trading. Only after it actually sustains trading over 17,500 can it really go and continue to persist towards 200-day average at $20,500. Otherwise, we are really, doomed in terms of the bulls. The bullish side of the market is really doomed and looking, to the downside, potentially extending the downwards movements, even into the direction of $12,000. We'll see. But what you're looking at, in terms of getting a little bit of a closer analysis, well, then this is very, very interesting, mainly because it gives you a deeper detailed look inside this failed pattern sequence. Because even if we, just turn off all the drawings, then what you're going to see and notice that this overall, sideways theme, remember that this is sideways within a larger sideways pattern. Yeah, so this all together kind of like contributes to this breakdown retest kind of like a form, right? Because it broke down with the FTX collapse and it tried to retest and break above the broken support. However, it failed, and this failure has been a dominant tendency, and ever since. And now we are looking at a couple of different failures along the way. So first of all, the failure of a breakdown of support level at 16, 15, 5, 600s, if you will. Then actually, of course, just rallied back. We got a failed pattern, this overthrow at the bottom, this specialist breakdown, which failed and rallied higher instead. Then it kind of like again formed this sort of like a December's sideways oriented pattern with an overshooting the top quite a kind of couple of times. First rallying towards $18,000, then 18,500 almost, and both kind of like in both cases the top was overthrown, the top was broken with a failed pattern. Yeah, because we did see this breach of the resistance, but this resistance was not kind of like respected as a new support. This polarity change principle failed there, or actually there was a lack of buyers, as the market tells us the story through the price action. So what it means is, well, that despite we were looking to the downside locally, we are moving inside this major range-bound pattern locally, again, between 15,500 and 18,500, which gives us roughly a $3,000 base size for the entire pattern. And if you manage to actually just approach it this way, and then you could argue that each and every single fake breakout, to the upside or to the downside, this downside breakout on the failure side or the upside breakout which fails, all propagate this sideways, mean reverting movement that kind of like gravitates towards the central level of the entire structure, of the entire formation. So here, we know that failed patterns tend to perform better in the opposite direction. So if it's an upwards breakout that fails, we tend to rally, we tend to move stronger to the downside. If it's a stronger breakout and response of the lows, this failed pattern tends to rally better in the opposite direction to the upside in this very context. We've seen recently this failed breakout on top, followed by this something that I refer to as this local, bearish flag pattern, this bearish flag pattern which broke down, and by the measured rule movement, it technically should have reached the area of 15,700s, 15,500, something like that, which matches the overall range lows kind of like territory. However, we see that this pattern kind of like failed again, failure of a breakdown, which means that again we are back on this local short-term positive outlook, because the failed patterns tend to perform better in the opposite direction. So instead of kind of like continuing and carrying the prices lower, we're looking at this major twist locally coming with a recent and sharp, influx of buyers, trapping all of those shorts, all of those late sellers who are actually right now on the water and trying to cover for the losses. So if that is the case, if so, we may be looking at this kind of like a reversal locally that pulls us back higher into the regions of the pre-breakdown levels of around 17,500, maybe $18,000. However, it's so far it's looking that this kind of like an overall fake out is larger and of bigger significance than this local tiny fake out at the bottom. Yeah, so I would argue that this major breakdown, this major, I should say, fake out, failed breakout on top outweighs this local tiny one, right? Because we're looking at the major fake out followed by tiny little fake out at the bottom, which may arguably elevate the prices, but with less consequence, with less significance than this major twist. So I would argue that we are looking at the major at an overall move to the downside right now, potentially towards this 15,500. However, the chances are that we are going to pull back a little bit after falling and tricking those late sellers, potentially towards the previous range highs of around 17,500, which we know that is already the main major support area. That needs to be validated by the long-term chart, right? Right now, of course, anytime the price gravitates from the underneath towards 17,500, we can expect this lever to work as an opposing force, kind of like a price barrier at first. And only after a successful breakdown, or successful breakout to the upside with a follow through with a higher high and higher low sequence, we can expect that the market is going to continue to rally towards 200-day average at $20,500. Otherwise, like I said, it's definitely better to be safe than sorry in money, right? It's very easy to lose money. It's very hard to make it back. Yeah, there is a lot of asymmetry in the time series data this way. And overall, I would argue that you should not probably lose sight of $12,000 as the overall target for this breakdown, for this broken down pattern that we're looking at, right? This breakdown is real, right? It's been sustained over a long period of time, almost 2 months that we've been on the losing side below the support of this major formation known as a descending triangle. Yeah, so this descending triangle again just places the target of around 12 or even $10,000, $12,000, somewhere over the is where our eyes and as for traders should be probably looking at. And so technical analysis is a beautiful work also for the self-fulfilling basis, because if enough people, if enough traders look at the pattern and have this confluence of certain targets, in a similar way, and many people gravitate, towards specific levels anchored there, place their attention, then this is also the reason why many traders may continue to trade in such direction and not another. And because of that, even if this doesn't make much sense, but lots of traders see $12,000 on a map, it may happen that the prices are going to continue to escalate lower if it makes sense. Well, so far I would argue that again, we're looking at this potential setup. However, the rejection of 17,500 tells me that we are more likely to go down with a local pullback. That's the story that I can tell the price action is telling me through the proxy of those 12-hour bars. That's the way I would look at it. And each and every single failed pattern, if it's on the bottom, it's likely going to perform better in the opposite direction. If it's on the top, it's likely going to pull the prices lower more efficiently and more effectively than not. So again, be ready for the worst, hope for the best. Let's hope and pray, we're not going to go down to $12,000 or $10,000. However, it definitely pays off better in finance to be ready for the worst case scenario, especially that we're looking at this major declining bearish market tendency, which has never recovered, which has never twisted. the stocks have already kind of like flattened out in terms of the averages, but not Bitcoin. Bitcoin has been persistently underperforming the stocks, and well, momentum investors are going to appreciate Bitcoin more to the downside, more on the shorting basis, as long as it underperforms, the S&P 500. Other than this, we're looking at this local sideways, which I would refer to as redistribution right now. That's what I can tell. By the recent failed breakout on top. So local upwards pullback maybe towards 17,500. If it, of course, there is a question mark to the story. We don't know what's going to happen in future. Just maybe it's going to immediately rally and blast through the resistance, and immediately break above the main bear market resistance over $20,500. However, technical outlook tells you that it's prepared. It's better to be prepared for the downside, and well, and definitely you don't want to get caught on the wrong side of a trend. Hope it helps. God bless you all. And by the way, before I go, remember that on 27th of December, we as the Bourbonists are celebrating our 5th birthday. That's right. We're having our fifth anniversary, 5th birthday. This is pretty amazing. Ever since I started, the Nest in 2017, I have met such an incredible amount of great people, great professionals. We have 14 top legends, top amazing professionals in the market insights analysis, as well as operators, who are helping each and every single person who's dealing within the Burb Nest, to get access, to get top-notch information, to get the tools and all the resources of highest quality, to get everybody the chance for financial freedom. This is what we do on a daily basis. And this is all to say that the 5th anniversary on 27th of December is going to come with a huge surprise. For the first time ever, I'm going to launch something really, really crazy and amazing for you for free. It's going to be a complete game changer to the way you have known the Bourbonists over the past years. It's going to blow your mind, and it's going to give you insanely valuable tools free of any charge whatsoever. And you can become, just maybe, the member of the Bourbonist on a premium basis for free. Stay tuned to find out more details because they're coming soon. December 27th. Mark your dates in the calendars, December 27th, in a week from now. Be there, keep your eyes open, keep your mind open, stay around. God bless you all. Bye-bye.